12 assets that will make you money. The savvy investor's crystal ball is in high demand. No need to raid a psychic's parlor, though. We've got you covered with a dozen investment gems poised to fatten your wallet. So grab your monocle, summon your inner investor, and join us to explore the top 12 assets that will make you money. First up, we have private credit investments. Private credit investments involve lending money directly to companies or individuals who cannot access traditional bank loans. These loans often have higher interest rates, making them a potentially lucrative investment opportunity. However, that's not all. It also offers lower volatility than other assets and stocks, providing a more stable investment return. They're typically uncorrelated to the stock market, which can help reduce risks and diversify your portfolio. So, what are the kinds of private credit investments you can make? Options include direct lending, mezzanine debt, distressed debt, and more. Each option has a unique risk and return profile, so it's essential to research and choose an option that fits your asset goals. But don't just take our word for it. According to a recent blog post from Sprouting Rock, Sam Adams, the portfolio manager, stated that private credit investments are expected to see strong growth, making them a hot commodity for stakeholders wishing to diversify their portfolios and boost their returns. The second on our list is high-yield savings account, or a high-interest account. It is a tortoise in the race. It's slow and steady, and while it may not have the adrenaline rush of other investments, it's a secure way to watch your money grow. Think of it as a financial garden. Picture this. You deposit your hard-earned money into a high-interest account and watch it grow at a rate higher than the national average. It's like watching your money do the hustle while you sit back and sip a Mai Tai on a tropical beach. Okay, maybe not that extravagant, but you surely grab the point. Not only do high-interest accounts offer a high rate of interest, but they also come with no fees and easy accessibility. They're FDIC insured, meaning your money is protected up to $250,000. So what's the catch? Well, there isn't one. High-interest accounts are low-risk savings, so you won't see massive returns overnight. But hey, slow and steady wins the race, right? Yes. On number 3, we have value shares. It is also known as growth or hurdle shares. These are basically stocks from companies expected to grow significantly above the market average. They're like sunflowers reaching the sky, aiming for that financial sunlight. Growth shares could be your meal ticket if you have an appetite for risk and hunger for returns. One example of a growth share is Tesla, which has seen explosive growth in recent years due to its innovative electric cars and sustainable energy initiatives. Despite market turbulence in the past few years, Tesla's stock price has skyrocketed, making it a favorite among growth investors. But Tesla isn't the only success story in growth shares. Popular figure and billionaire investor Warren Buffett has made a fortune investing in companies like Amazon and Apple, both of which have seen incredible growth in recent years. Buffett once said, "Our favorite holding period is forever when it comes to investing in growth stocks." So if you're considering making serious cash, you should invest in value shares. The number 4 on our list is real estate. Investments in real estate are a solid foundation for a diversified portfolio. Whether commercial, residential homes, or real estate investment trusts, REITs, the property can be your golden goose, laying wealth eggs for years. Real estate can take many forms, from a single-family home to a multi-unit apartment building. Property investment can provide short-term and long-term returns and a potential source of passive income. One example of a successful real estate investor is Donald Trump. Say what you will about his politics, but the former president of the United States made his fortune in real estate. He started with a small loan from his father and turned it into a multi-billion-dollar empire. But you don't have to be a billionaire to venture into real estate investments. Since the rise of crowdfunding and REITs, it's easier than ever for the average person to get in on the action. For example, you can invest in a platform like Fundrise, which gives you an opportunity to diversify your portfolio by investing in real estate projects for as little as $500. Or you could venture into a REIT like Vanguard's Real Estate ETF, VNQ, which exposes you to a broad range of companies and properties involved in real estate. Of course, investments in real estate have its risks. However, your venture will thrive with thorough research and an understanding of the market. The potential rewards can be substantial if you're willing to put in the work. Fifth on our list is active funds in mutual funds. Active management involves a human touch, like a maestro conducting a financial symphony. So, what are active funds and mutual funds? Unlike passive funds, which track a specific index or benchmark, active funds are managed by investment professionals who pick and choose individual stocks and bonds to beat the market. You might think, why would I pay higher fees for someone to manage my finance when I can buy a low-cost index fund? And that's a fair question. But the truth is, some active fund managers have a proven track record of outperforming benchmarks and the ability to earn higher returns over the long term. For example, consider the Fidelity Contra Fund, which has consistently beaten the S&P 500 index over the past decade, or the T. Rowe Price Blue Chip Growth, which has delivered an average annual return of 10.4% over the past 20 years. Of course, not all active funds are winners. It all boils down to research before venturing into any mutual fund. But if you want a more hands-on approach to investing and are willing to take on a little more risk, active funds and mutual funds might be worth considering. So what do you think? Are you a fan of active funds or prefer passive funds? Let us know in the comments below. What about making money while you sleep? Websites, our sixth asset, are like 24/7 employees who never take a break. Whether through advertising, subscription, or e-commerce, websites can generate revenue around the clock. And the best part, they don't ask for overtime. But hold up, before you run off to create a website, you should know a few things. 1. It would help if you had a clear niche and target audience. 2. You need to offer something unique that sets you apart from the competition. 3. It would be best if you put in the time and effort to make your website stand out. So, if you're up for the challenge and ready to dive into the world of website monetization, get prepared to rake in some serious cash. Up next are the classic scrip dividends. Also known as shares with dividends, it's an investment type that will easily enable you to earn passive income without lifting a finger. When you invest in a company's shares, you become part owner of that company, and as a result, you're entitled to a share of its profits. These profits are distributed to investors in the form of shares. But here's the best part. Not only do you get a slice of the profits, but you can also sell your shares for a profit if the company performs well. It's a win-win situation. The eighth asset on our list is certificates of deposit, CDs. CDs are poised to be a dependable asset for those seeking stability and predictable returns in their investment portfolio. CDs are time-bound savings accounts offered by banks with fixed interest rates higher than regular ones. The premise is simple. You deposit a sum of money for a predetermined period, and at the end of that term, you receive your original investment back plus the interest accrued. CDs are a safe bet due to their backing by the FDIC, ensuring a return of up to $250,000 if the bank fails. This safety feature is increasingly desirable in a financial climate marked by uncertainty. What's more, the interest rates for CDs are fixed, which shields your investment from any short-term fluctuations in the market. While CDs aren't typically a get-rich-quick asset, they serve an essential role in a diversified portfolio. They provide a balance, countering the potential volatility of higher-risk investments. With inflationary pressures looming and market instability, CDs can serve as an island of stability in a sea of unpredictability. Our ninth asset is the Index Mutual Fund, or ETF. Now, I know what you're thinking. What exactly is an Index Mutual Fund, or ETF? Don't worry, we've got you covered. Index Mutual Fund, or ETF, is an asset that allows you to buy a piece of a large portfolio of stocks or bonds. It's like buying a slice of the entire market. And the best part? You don't have to be a financial genius to venture into one. These investment types are known for their low fees and ability to track the overall performance of the market. With the stock market expected to see a continuous rise, investing in an Index Mutual Fund, or ETF, could be wise. Next up are digital assets. Imagine owning assets you don't need to store in your basement, thinking about getting stolen or damaged, or even having to see in person. Digital assets are the way to go. From digital art to domain names, owning a digital asset can make you money. Why not invest in something that won't clutter your space and might even fill your pockets? On the 11th spot, we have franchises. Owning a franchise can be a great way to invest in a proven business model and make some serious dough. From fast food joints to retail stores, there are tons of franchise opportunities out there. Plus, with the support and resources of a larger company, you won't have to go it alone. A franchise can be your money tree with the right choice in management. Last, but certainly not least, we have bonds. While they may not be as flashy as stocks or cryptocurrencies, bonds offer a stable and reliable source of income. Think of them as IOUs from companies or governments. They borrow money from you and promise to pay it back with interest. But why settle for a measly 2 to 3% return? Well, bonds can be a valuable addition to any portfolio, providing a buffer against volatility in the market and acting as a hedge against price rises. Plus, they're a great way to reduce risks and diversify your investments. So don't sleep on investing in bonds. Give them a chance to show you what they're made of. Who knows, you might just be pleasantly surprised by the returns they can bring. So there we have it, 12 potential assets that could redefine your financial future. Remember, the world of finance is like an ocean, vast and full of treasures. All you need is the proper map, a sturdy ship, and a bit of adventurous spirit to navigate its waters. So, do you wish to set sail on this exhilarating journey of financial discovery? Take advantage of the boat this time around. The treasures of the financial world are waiting for you. And remember, fortune favors the bold. Thank you for joining us in this exciting exploration of 12 assets that could make you money. Please make sure to like, share, and subscribe so you don't miss out on future nuggets of financial wisdom. See you next time, savvy investors. Remember, it's not about the money, but the freedom the money can buy. So let's get to investing and start living our dreams.